Hello guys, welcome back to my channel. I was thinking of doing a video about the trade I took in PEL, but I couldn't find time in the past couple of days. So sorry for the delay, but anyway, it's going to be a very good educational video for you. It's a kind of swing trade I took, and I mean, it depends what you call a swing trade. Some people might call, like, if you hold it for like say 3 weeks, 4 weeks, that's a swing trade or something like that. But all I believe is, in because I trade in futures, if it's about capturing one leg, that's what I call a swing. So just to make that clear, so I'm not holding it for, like, 3 weeks, 4 weeks, or 3 months. So swing in the sense is just one leg. That's what I'm considering it as. Okay. So PEL, I'm going to discuss with you the three topics here. One is the strategy that I used. The second one is the psychology, the trading psychology. What was the psychology behind taking the trade and holding on to it, and even though the price wasn't moving in my favor initially. And third one is risk management. These are the three things that I'm going to cover here. These are the three things that you should always be aware of before taking the trade, so that you know what you're doing. Okay. So PEL, first let's discuss about this strategy. Okay, I had explained in my swing trading videos as well, like while shortlisting the stocks for swing trading, I had explained there. I'll just briefly explain here so that you get the gist of it. See, simple, I just drew this trend line. Okay, so oh, by the way, I just want to make sure the dates I took the trade so that you get to see that. I'll just zoom this one on for you. As you can see here, it's the 24th of May I took the trade, and 31st of May I exited the trade. My entry buy price was 1725. Obviously this is the futures price. Okay, I took the June futures 1725, and I think it was running at around 10 rupees premium at that time from the spot price, and I closed at 1835. So I'm going to explain to you why I took the entry at that point and why I exited at that point. Okay, so just remember this, it was on 24th of May and then exited on 31st of May. So as you can see, this is the candle that I took the trade on. Okay, the bearish bar here. Okay, so that's the one. Let me just straighten this up. Okay, so now as you can see, the trend line broke the previous day and the price closed above the trend line quite comfortably. Okay, so this was on 21st of May. Obviously it was on Friday, so Monday I took the trade. Okay, so this was 21st. I don't know why I'm not seeing this. Okay, right. Okay, so now so this is the bar I'm focusing on. Okay, the green bar that just gave me the confirmation that yes, there has been some good bullish presence. Basically this particular green bar. Okay, that's the bar I'm looking at. So after that close on 21st, I went to the lower time frame, 30 minutes. So this was the day that closed. Okay, this was the day, which is 21st May. Okay, and as you can see here, there was a nice strong bullish presence in this particular leg, and then it broke the trend line comfortably and closed above it. That was very important for me. That just gave me a heads up basically to look for buying opportunities. Okay, the next day, that is on 24th, which I took the entry, simply what I did was I was looking for some good entry point. As you can see here, the price was making a nice higher high higher lows formation here, right? So all I was looking for is this, expecting this level to be a good support level for the price. Okay, and you can see the conditions. The trend line has been broken, the price has sustained above the trend lines and closed above it quite comfortably. So the next day I was looking for some sort of retracement. Okay, and I got that retracement as well. Even though the first bar was like a bullish bar, I waited for the retracement because I was expecting there could be one retracement. So I was expecting the price to come around the level that I have marked here, and then wanted to buy. Now I took the entry here. okay, at after this bear bar, the high of that bear bar. After this high of the bear bar was broken, I took it. I mean, it looks like a bear bar, but it's basically, you can see that the rejection from the bottom. Okay, so doesn't really matter, it was very close. It could be a bull bar as well as a bear bar, so the body was like negligible, so that's it. Above the high of that bar, I took the trade. The reason was basically, my understanding was, there was a price rejection on that bar. So whether it was a bull bar or a bear bar, it didn't really matter to me. There was a rejection from the zone that I have marked. And before that, if you see the bar on 10:15 bar that closed at 10:45, there was a nice rejection from the same zone. But I was even ready to take the trade above the high of that bar, but that didn't happen. The price just started coming down and started testing these levels again. And when I saw this rejection again the second time, I just took the trade above the high of that bar. Because this is a swing trade, it doesn't really matter, like 1 or 2 rupees this side or that side, that doesn't really matter. So it's just about taking an entry. Okay, because I was very very bullish on this particular stock, and I didn't want to miss out on the opportunity just for bargaining few rupees here and there. So I just thought this was a very good zone, and then I took the trade. So that's the strategy, guys. So now coming to the next topic, which is psychology. This is also very important. See, as soon as it took the trade, I mean, every trader would like to see, as soon as they take the trade, the price, they want the price to move in their favor immediately. Okay, but these are all testing times. Okay, so you have to get used to these kind of things, because it's very important, okay, to become a professional trader. It's very important that you sustain during these phases, okay, where the market was completely sideways. Okay, you have to be psychologically ready, basically. Okay, when it goes sideways, it tests your patience. Even though you are a swing trader, you might still get worried. Okay, I mean, if you see here, the trade was taken around 11:45 by the end of that bar means, and till 2:15 there was no movement. Okay, that's one kind of testing the patience. And the next worst thing, the bar just drops so much, so drastically, almost 1% down in just one single 30-minute bar. So again, that's a very huge blow psychologically. I mean, especially if you are new to stock market, or if you are trading new especially in futures, where the lot sizes are too big, and then these things can affect your psychology as well. Okay, so that's the reason I'm covering this part as well in this. So initially it didn't go in your favor. That's one worst thing that could have happened. And the second worst thing, it went against your favor, basically, right, against your direction, and making you show a big loss there, right? But now, because we know what we are doing, and we know our stop loss was somewhere around here, okay, slightly below the low of this particular swing here, okay, slightly somewhere here, I could say. So my stop loss was somewhere around 45 rupees, I guess. Okay, I took the trade here, so around 42-43 rupees was my stop loss. Okay, you have to understand, see, you have got the entry price, you thought well about it, you took the entry, and then you know where your stop loss is, and you know where your target is. My target was basically based, I'll come to that later, but you know your entry price and you know your stop loss price. So no matter what the market does in between, you shouldn't be really be shaken off by that. You have to get used to that kind of volatility. If you're not comfortable with the volatility in the market, then definitely you're going to face hardships in this particular field. Okay, you have to get used to the volatility, but that's the reason you have your stop losses, and you back up your assessment and then the strategy that you are implementing there. Okay, that's the thing. So even though it fell so drastically, it didn't break the structure. Okay, market, no matter how much volatile, if it wants to do something, if it wants to go in a particular direction, no matter how much against it goes against that particular direction it wanted to go, it won't break the structure while doing that. Okay, that's what we are seeing here. Even though it fell from here to this point, from here to this point, it didn't break this structure. This was a very important structure level. Okay, so it didn't break that, and then try to go up again, sellers came in, and then try to go up again, sellers came back, and then after this this was like the third time these levels were started holding up. You see here, the bulls were shifting their base. They initially started with this base, next they started with this base, next they started with this base, and then they're shifting to this base now. So that just if you look at the positive side of the market there, the bulls are doing well because they are shifting the bases higher, which is like in your direction. So that should give you some solace there, and then you should be confident that to hold the trades. So it was probably 3 days, I guess, from 24th May, and now it's 27th May. So I had to wait for one whole week, and then after that a sudden surge in prices. Okay, it went up like here, and I didn't close the position there because now I'm going to tell you how I set my target here. You see, it's all about, now we are moving to the risk management part. Okay, how we are going to manage our risk. You see here, there was a big fall from this particular point. This is on a 1 hour time frame. There was a big fall from this point here, so I wanted to close my position before that, somewhere there. Okay, that's the whole idea there. And I'm still bullish on this particular stock, but at this point, because there was a big fall, a significant fall from that point, I wanted to close my position right at that point or just below that. Okay, so now getting back to the 30 minutes, now you clearly know what my risk, what my reward was. Okay, I'll just show you how it is. Okay, I think I removed that. I'll just mark this once again, my resistance level somewhere there, and then let's go to 30 minutes, and then let's mark our entry and exit points. So this is about risk management. I'm going to tell more about that in a minute. My entry was, the spot price was around 1715 when I took the trade in futures, so let's put it there, and my risk was somewhere below that, so let's put 42-43 rupees, and my target somewhere around here. So I even closed around 1835, 1836, something like that. So as you can see here, my risk to reward ratio is 2.8, 1:2.8. So what that means is, if I'm risking 1000 rupees, I'm expecting a reward of 2800 rupees. Okay, so it's obviously futures, so the lot size will be 275. So my risk was basically 275 times 42, and then my reward was like that much, 2.8 more times than my risk. That's why I closed there. That's the reason. And it started coming down. Okay, as I said, I was looking for right up punch to buy again, but I was expecting some more retracement actually, because it was a re-entry. I didn't want to enter too quick as such. I was looking somewhere here, to enter again. If prices drop to this level, then probably I would look for buying or something like that. But anyway, now I'm out of this trade. I'm still monitoring this trade. So now you know about the strategy and the psychology and the risk management. That is very important, because you cannot really be a profitable trader if you go for just 1:1 risk to reward ratio, because you have to hit at least 65-70% of the time correct. Okay, so with 1:2, 1:3, then even though you are right like 4 times, 3 times, you are still profitable. So, and that's the thing, guys. The beauty of swing trade is basically you don't have to rush into trades. You can easily assess it, and especially if you want some time to assess, and if you cannot really think fast and decide quickly and take the trades fast, then swing trading is the best one, and it also a better one, because obviously it tests your psychology and patience. Both intraday and then swing trades do have their own limitations and benefits. So it's just up to you as a trader what kind of trades you prefer and you are comfortable with. To be honest, I'm comfortable with both intraday and swing trading, so I do both of them. But you can just opt for any one of them if you want to, or if you are okay with both, you can do both. I hope you like this video, guys. I will bring some more videos like this, and I'll keep you updated in the meantime. So if you haven't watched my SBI live trade analysis, please do watch that also, so that you get better insights about price action trading. If you like this, please share with your friends, and also subscribe if you haven't done yet. And also I have a free Telegram channel where I post about the portfolio builder series before taking the trades, and if you are tracking that, that's going to be a very good one. And just a quick information that the portfolio builder is doing really well. The Nifty's performance, it's outperforming the Nifty's performance basically, and we are gaining around 14-15%, something like that, and where the Nifty's has gained about 6% or something. So I'll keep you posted on that. Do watch those videos as well about portfolio builder series. That will be good for you if you are looking for some investment. And it's always a better time. It's always a good time for you to invest in the market. So don't wait for correction or anything. If you see some good stocks, go and enter it. Okay, I hope you like this video, guys. Thank you. See you soon.